So I'm going to be pretty brutal in this video. I'm going to explain to you why you suck, why I suck, why everyone around us sucks, because it's called human emotion. We're going to talk today about key levels. Now, why is this important? It's all about having a plan and executing that plan. Whether you're in an uptrend or a downtrend, whether you're taking profit or looking to buy, you should be in control of your destiny. Too many people get over emotional and create problems for themselves as an investor, a trader, or even just a speculator in terms of what's happening in the world, right? On the screen, we're going to talk about it in clear, obvious detail, very, very short and concise, because I think it's important to know. This is Ethereum, right? As you can see, we've had a little bit of a pop to the upside here, and we have gone up to a key psychological level on the 382 from this entire structure kind of level, right? It's an important level to note, and also why we've rejected that level. But when you zoom out a little bit, you can see there's quite a lot of noise around this level from early 2021 and also into 2020, kind of almost levels, not too far away. But the reality is you can zoom out even further and figure out, well, psychological levels of why we've bounced from this point is from the previous all-time high. That is why there's been such a big breakout as well, because we've flown above certain levels of key regions. So let's dumb it down a little bit, right? So if you don't know this, I invest using dominance, essentially. When it goes down, that's usually good for the market. When it goes up, it's usually bad for the market. I talk about this on my Patreon. I teach you how to use it in full detail, whether you want to do it on BTC, Ethereum, or even USD. Feel free to check it out. But I want to talk today about levels, key levels of interest. Now, there's a little hack that you need to kind of get used to using. Monthly time frames, right, boys and girls? What you need to do, go to the line chart. And you need to plot out your levels of interest, right? It sounds really obvious, but it is. Now, what I've said before in previous videos and previous kind of, tuition, whether it's on learning crypto or whatever, we always go back to the originality of a pump, which is where people lose out the emotion, because some people would have ridden this all the way up to the fucking moon, not took any profit. You could say the argument with stock market stuff as well in the current climate. You can ride it for 4 or 5 years. Oh, I'm making money. Well, you're not, mate, because you've not taken profit. So what you need to do, go to the monthly and start looking at the obvious levels. Just plonk them like that. Super simple. You don't have to do anything radical. And you need to look at these levels for what they are actually worth in value. Now, I've said this before, and this is where you'll probably get confused, because this is showing the monthly closes of those assets. When I go to the weekly, you're going to find there'll be a little drop. You'll probably know this anyways, because we went sub $1,000 on Ethereum. This is why I'm using it. Now, when we look at these levels, they're interesting levels for 2 or 3 reasons. They could, keyword is could, become a level of interest in the future. This is why you need to plan your orders just in case things go. Now, what people forget is you need to work down towards them dollar cost average. People go for this order thinking, I'm going to make loads of money because I'm going to get loads of Ethereum by putting $1,000 in there and get 2.1 whatever Ethereum, whereas you're actually forgetting the most key levels. Have you noticed what's happened at this level? It bounced. That is why you need to buy those levels. Key levels will get you in, and also key levels will get you out. Make note of it. You can see you got a little bit of structure now. Zoom out a little bit so you can see even more levels. If you want to make note of more obvious levels, you can. Like, look at this level for example here. It's going over support, resistance, and a lot of other bits and pieces. You don't want to go too deep. You don't want to have multiple levels on your chart, but you want to have a plan and make note of these levels. So I won't go too deep on this one because there's no real point, other than the fact that maybe you're going to look at this level here, in between. There's so many levels that you can look at. You can color code these, you can do whatever hell you want, but just have an idea of where, 1, your fucking buy orders are going to be, and 2, where your profit levels are going to be. Because if you're not, rotating the bag, you're not making money. And I know someone's going to bloody put a comment and go, but tax, don't care. If you're an investor or a trader, get used to it. Tax is a thing, right? One more final one for the weekly. Look at this one here. Again, support resistance all the way through. This level is a massive level. Why? Because it's very, very close to these all-time high levels. So make sure you make a big note of that. Ultimately, that is a monster level of interest. So you can go all the way through, and if you wanted to, you can just do that. It's a bit of a biggie, in and around near that top level, so it's huge. Again, going down to the daily, you don't want to go too deep on the daily, but ultimately, if you see something obvious, use it, utilize it, and look at it. You could probably argue all the way up here. However, go back to the candles, right? Keep it super straightforward, keep it super simple, this is kind of how it looks. Obviously, as I say, you can color code these so you know where your levels are, or you can use a more neater formation of it. But this just gives you a bit of a highlight of where things are going and what you should be doing. Making money in the market is relatively straightforward if you've got a plan. This is what I do ultimately with my charts, right? So if you're looking at this, I always say, look at key levels, look at key levels of interest. But I usually use a Fibonacci more than using this, but this is more for like beginners. You can be able to get a good old grasp of it. Now, if I remove the noise, and if we're going to look at like the higher time frames, a weekly again, or something like that, what I tend to use is a Fibonacci, right? So we're going to go from this swing high to this swing low. These are where my orders have been, right? So I plonked an order, I've got an order down here. I genuinely have a feeling like the worst case possible scenario, we're going to probably find a level in between this region where these wicks have been. As I mentioned before, we have closed very, very close in these sort of regions, right? But you got to look at the past here. The line chart will give you an absolute level. However, the wicks on the candles will give you a little bit more, right? So when we're looking at these levels, it's a massive level. In my opinion, if you are going to put a percentage around this box here, I would say there's a chance that we may well, if we retest this low, may well fall into this low. It's all about probability, right? But as I say, right, you don't want to be dollar cost averaging all the way down to the bottom. You want to wait for things to turn around. You want to look at certain moving averages. You want to look at certain metrics, right? But when you're looking at key levels, look at where we've been in the past. You know, make a note of the fact of this level. How many people would have been talking about this level here at these tops? I was, because I was saying, well, if we're going to turn around, we're going to go back to that previous all-time high. We're always going to test it. Everyone was like, we're never going to go below that previous all-time high. Bitcoin was a big example of that, right? Proved it, didn't we? We went below it, even though it didn't for many, many years, right? You got to look at that fact. So again, you're going to be looking at that level. That is a most clear and obvious buy level you're probably going to find if you are dollar cost averaging to get a nice average versus what you would have been down here. But again, if you're buying low, you probably look at this as a profit-taking level as well, due to the past of where it's been. You know, you win some, you lose some, you're always going to get something if you buy low. But as I say, right, if you started to see this level here consolidating, which it had been for a few weeks, it's not a bad place to buy, because even if you're looking left, you have little levels here of consolidation on this weekly time frame. You've also got a support level here with the wick. It's a hugely important factor. So I hope this video has helped you identify something obvious. Look at the past levels. Every single asset on this chart or wherever course of time, we've pumped and we've literally went back to previous levels of history. We always do. This is how markets work. It's all built on emotion. I mean, if you said to me or someone, you know, the highs of 52 on Link would go all the way back down to like the lows of 2020, or like one of the low points of 2020, essentially in terms of consolidations at like $7-8, you'd probably laugh. But reality is all about emotion. This is why those psychological charts do help you. So make sure you make a note. Anyways, if you enjoyed this video, leave a like. It majorly helps. And ultimately as well, if you want to join learning crypto and learn more stuff or just watch more videos, there's a nice recommendation here.